Hey all, welcome to Share Trek. How are you guys doing? It was an amazing day, and for those who have not seen these kind of markets before, it would be very distressing. And I also remember my earlier days when I used to get really worried and sell off stocks like crazy, only to repent later. But things are much better right now, but I still have to learn a lot. So today, I think for the genomic investors, before I get started with the genomic analysis, I just want to give a few of my thoughts so that you could consider them and decide if it is good for you or not. So the first thing I would say is that if you zoom into any of these indices, you will see that, let me go into a monthly 1 month time frame, recalibrate. This is S&P 500 we are talking about. So I'm showing you S&P 500. In the long run, it has always been bullish. We are in a bullish ride throughout, but intermittently you get corrections of maybe 10%, sometimes 15%. And all those dips are buying opportunities. So if you recollect, I was saying that I have sold off my stocks and taken profits, and I'm waiting with cash. Exactly what I was doing this morning, trying to buy on the cheap. I bought a little bit of Google on the cheap, and dollar cost average down. I believe it's a fundamentally sound company and it will bounce back. I'm also looking to buy some Nvidia. I'm looking to buy some Amazon and Microsoft. So those are all what I'm looking at. The Mag 5, where I took a lot of profits, I'm trying to restock myself. And there's a slight difference in my approach this time around. I have sold all the holdings of Berkshire Hathaway I had in the portfolio that we are looking at, and I booked profits of around $4,500 or $4,900, something like that. And now I'm trying to dollar cost average back into Berkshire Hathaway, so that when we are in the bottom of the market, I should have all the stocks that I had sold when we were at the top. So that's the counter cycle that I'm trying to engineer. Another way of looking at it would be, if you don't want things to be complicated, maybe you buy Berkshire Hathaway now and stay put in it for the longer term, and it's going to come back up again. It doesn't lose too much value. It's quite defensive. But at the same time, you have to remember it's a conglomerate, so there will be many parts of the conglomerate which are exposed to tariffs, which are exposed to all the downturn that we get. Not all of them are in staples. So please keep that in mind when you're looking at XLP and others. You have to think of preservation of your capital during these kind of times. So when you buy them is also important. The consumer staples and all are probably best bought now before the price goes up, because by the time things are really bad, consumer staples will already be too expensive. So the defensive positions have to be taken. So I have the cash in hand, so I have the opportunity of going into defensive right away, or to chase those high value growth stocks when they go to the bottom. So I'm preferring to do both. Part of it I'll put into Berkshire. I'll dollar cost average my way down, but I'll keep a good portion of my capital freely available so that I can dollar cost average into Google, Meta, Microsoft, Nvidia, Amazon, those companies, so that when the growth comes in, Berkshire will hold the value and these stocks will go up. Now you'll be wondering, Raj, we are a genomics channel, why are you not buying genomics? I have my reasons for that, because this is not the season for genomics. And if we do get recession or stagflation, money is going to be difficult to come by. Interest rates will be challenging in case of a stagflation, and in case of a recession, venture capitalists would not like to lend money for any pioneering venture. They would rather keep the money in bonds and get a fixed return and save the capital for when the market gets better, which is when they think that startups would succeed. So many companies in our genomics watch list, which are having a shorter cash runway without monetized products, many of them are likely to be either taken over by private equity or get merged with something else, not always in favorable terms. And then you may end up losing some capital. That's the way I'm looking at it. So I'm not getting anywhere into genomics right now. But if I was pushed to get into genomics, I would be looking at CRISPR Therapeutics and Illumina. These are the only two companies that I would look at in our watch list of genomics right now. And if you were to look at the extended one, I would say Vertex looks good, Johnson & Johnson's look good, Pfizer looks good. So those are the companies that look good because they are in the healthcare sector and they have products which are already being used by patients across the economy. So having said that, now let us come back to what has happened today in the market. So let me zoom back into the 1 day time frame and recalibrate my chart, which I always have to do on TradingView platform. So as you know, we have been on this bull channel and then we started coming down, and I was saying that this could be a bear flag or it could turn into a bull channel if it crossed 50% of the flagpole out here. It did not cross 50% of the flagpole. And yesterday I was saying that we have formed this narrow candle out here and we are just slightly below this line of resistance at 5738.00. If we went down, we would have our first support at 5680.25 and second support at 5639.00, failing which this diagonal line of support will provide a support. So we have dropped beyond my wildest expectations in case of S&P 500 today. Yesterday it was NASDAQ that let me down. Today it is S&P 500. It broke through all the supports that it had, and it has gone and touched the diagonal line of support from a previous bear channel, which is holding it up for the time being. Now for tomorrow, what's going to happen is if we break down below this, which I think is a very high probability, our next support is going to be this huge area of support. And I will also, for good measure, throw a minor line of support out here. This will be a very minor line of support for S&P 500 tomorrow, and that is going to be somewhere around 5528.25, and hopefully we are not let down by S&P 500 tomorrow. And on the way up it will have resistance at 5639.00, and if it clears that, then it will have a resistance at 5680.25. So our roadmap is clearly laid out, and if you look at the MACD and the momentum, they give a clear indication that we are going down. So we are looking at S&P 500 futures, and this is what S&P 500 futures indicates to us. So there's a bearish gloom out there, but remember, we are on the weekend, so we got Saturday and Sunday. The psychology can be cleansed. Something could happen in between during this weekend, and we may get some positive catalyst. And when you open up on Monday, surprise, surprise, we could be galloping all the way up. That's quite a possibility because fundamentals and catalytic news always triumphs all these technicals. The technicals show the underlying psychology and the underlying structure of the market. Right now the structure is bearish, and from bearish to bullish just needs a new news which changes the psychology and makes people feel positive about the market. So be prepared for both the eventualities. Next, let us look at NASDAQ. NASDAQ, I said, was going to find it very difficult to go down below this huge area of support. Unfortunately for us, it cut through it like a knife cutting through butter, and it has landed bang on top of this diagonal line of support, which is a very important line of support. I'm going to show you this support in a weekly time frame so that you can see how important it is. It has been coming with us all the way from 24th of October 2022, and right now we are on 28th of March 2025. So it's a multi-year support which has lasted us a long time. So if you consider all those things, and then if you look at where we are today, it definitely shows tremendous weakness in NASDAQ. And right now the market is still open for post dealings, and it's still going down. It's down 2.76%. So by the time we open up tomorrow, if we manage to stay above this, then I would say this entire green area that we have out here is going to be an area of resistance for us, and our support is going to be this diagonal line of support from a previous bear channel. So I'm going to pull this out a little bit out here, and I would say that for tomorrow our support is going to be 19,357.25. Now if we break this, then the next support is going to be at 18,553.25. So that's the lay of the land as far as the indices are concerned. Now, genomics sits within this universe of these indices. So the way the indices go, that gives you overall direction of where the school of fish is going, and genomics is one of the fish in the school of fishes. It will try to stay in the among the school of fishes, but sometimes it may be left a bit behind and sometimes it may be a bit ahead. So those kind of variances can happen, but generally the direction is downward. Now, if we take a quick look at our 10-year yields, the 10-year yields have surprisingly come down, and this diagonal line of support now becomes a diagonal line of resistance. We have seen these kind of sharp movements before. If you recollect, there was this huge green flag which went from down to up. This flag is of the same magnitude. The difference is that we have broken below a diagonal line of resistance. We'll see what happens tomorrow. If it goes ahead and forms shoulder and it triggers this reverse head and shoulders, we have already said that it's going to go to somewhere around 3.4%. This is in a way good for the housing market because mortgages will become cheaper, and those who are on the sidelines waiting to buy a house could definitely enter the market, and there'll be a little bit of life pushed into the housing market. That's the way I'm looking at it. Now let us go to genomics. And in genomics, I'm going to start off with Grail. Grail did not disappoint. It came down as we predicted, and it managed to stay above this diagonal line of support of a previous bear channel. So to that extent, it is good. It continues to deteriorate. MACD has become even more bearish, and momentum has dropped even more than where it dropped yesterday. So our next target is that tomorrow we are going to have very strong support at 25.97, which is the confluence of this diagonal line of support and the horizontal line of support. And I'm going to just invoke our exponential moving averages. I don't see any exponential moving averages giving us any support. However, if we were to move upwards, we are going to get resistance from the 200-day exponential, which is this dark line that you see out here, and it's at 27.37. So that's what we have for Grail. And if you look at Caribou Biosciences, true to our prediction, it has stayed within this bear channel. And in fact, it has come halfway down to where it had gone up yesterday. So I think that in a way, it's a good thing that it has not come down all the way to touch this diagonal line of support. So I'll take this as a kind of a little bit of strength, exhibition of a little bit of strength, but we are still below the 9-day exponential moving average. So our resistance is going to be the 9-day exponential at 0.9765. And for tomorrow, our support is going to be this diagonal line of support, which will take us to somewhere around, I would say, 0.8738. And when I say tomorrow, basically I mean Monday, which is the next working day or next business day. And that said, let us look at Verve. Verve has dropped 1.23% today, and it fell below this diagonal line of support and converted it into resistance yesterday. And today it tried to pierce through it and break through, but it could not. So there is inherent weakness in Verve. And now what we're going to see is this diagonal. So we have this diagonal line of resistance and this horizontal line of support. And both of them are going to create this wedge. And typically I would think that because this is a bearish channel, I think the wedge should break down on the downside. It depends on when we are going to break down on it. So I'll leave it for the next sessions. mRNA is flat after the post-market hours, and during the day it dropped 3.11%, and it still has got support out here exactly like yesterday at 29.71, and it has got a resistance at 32.64, which is the 9-day exponential, and that's where I'm going to leave it for today. Ginkgo Bioworks has completed the double top formation. It has triggered the double top formation today. So my friends, I think you have to be geared up to see Ginkgo touch 5.28. So it's going to continue to go down and touch that target before it decides to do anything else. Beam Therapeutics is below the minor line of resistance that we created yesterday, and it has stayed below that. And for tomorrow, I think it's going to perform the role of a resistance for Beam, and then the 9-day exponential moving average will be the next resistance for Beam. In the bottom, I don't see much of a bottom out here, but Just to give us some kind of a guideline, I think I'll use this line out here as a minor line of support for tomorrow. And this line is going to sit at 21.83. So that's my conservative approach for a support out here. And then let's look at Illumina, which has unfortunately broken down below our line of support of 80.60, thereby converting it into a line of resistance. And now that is going to form the resistance for tomorrow. So our resistance for tomorrow is going to be 80.60, and our bottom is undecided. We'll have to chart new depths out here. We have not been in these territories. So Illumina is going pretty cheap. I'm pretty sure that one of these days the China issue will be resolved, because we are now approaching the midterms. So as we come closer to midterms, the public memory has got to be feeling fresh about giving a second term to the ruling party, which is the GOP. And in order for that to happen, some amount of sensibility has got to come. All the structural reform and everything are always painful, and they cost a lot of capital for a newly minted president. And President Trump has bravely used it to make all the reforms that he thinks is necessary to make America great again. But it has created a lot of discontent in a lot of his constituents. So he will have to address those things. And a part of those things would be making good with Mexico, making good with Canada, whether or not you put it on the news, but trying to dial down the rhetoric and making that fade away, and having some neutral new shining object, let's say like picking up on Lady Gaga, or picking up on Richard Gere or somebody like that. I'm just throwing names out here, which is very harmless, and then the people, it will be more of a cultural issue, and people will start focusing away from these things, and business can come back to normal, and workers can continue working, and inflation will be under control, etc., etc., etc. I think we can look at some kind of a gambit like that 6 months down the line, because if it's not done, then the Congress will be at stake. So around that time, I think China will become a much better proposition, and Illumina can jump back up again. So I'm going to check out Illumina and try to make a video on Illumina to look at its fundamentals, and try to decide whether it's worth starting a dollar cost averaging expedition at this point of time for Illumina or not. So that's what I'm thinking about, and I'll keep you appraised of that. And then we have Altimmune, which is down 4.49% in today's trade, and post-market it has recovered 0.38%. But overall, I think it's looking very bearish right now. And then you look at Unicure. Unicure is no longer going to do the reverse head and shoulder. It has broken the trend. So I'm going to remove these things and just forget about it. We don't want to see what could have been. And right now we are firmly within this diagonal line of resistance and within the bear channel. So our resistance for us, immediate resistance, is going to be the 50-day exponential at 13.31, and then we have the 20-day at 13.40, and then we have the 9-day at 13.47, and then we have this diagonal line of resistance, which will become effective at 13.86. And as far as support is concerned, the 200-day exponential, which is sitting at 10.57, is a support, and also the 100-day exponential at 12.27 is going to be a good support for Unicure tomorrow. And that said, let us look at Intelia. Intelia is continuing to travel this bear channel as expected. It's right on top of the bear channel tonight. So on Monday, I do not know what's going to happen, because MACD momentum both are weak, and there's a very good chance that it's going to break down below this diagonal line of support. Post-market, it's down 0.12% further, so it's not looking that great. ARCG has triggered the bear flag. So we had the bear flag out here, it has got triggered. So I'm just giving you a rough guideline of how much ARCG can fall. ARCG can go all the way up to 16.73. Just because I put it there doesn't mean that it's going to go there. I'm saying that that's the maximum potential that we have for the price to go down according to this bear flag that we have, because this is the flagpole, and we have replicated the flagpole from the point where the price broke out of the bear flag downwards. So that's what I have here. So this is 16.77 is the downward target. It's not going to happen in one day. It will happen over a period of time, but that is the potential out there. Then we look at CRISPR Therapeutics. It's we have this pattern called as 3 black crows. Now we can say we have a 4 black crows pattern because it's going further down. So for the purpose of this, I'm just going to pull this one out and keep it ready so that when we come down, we know where the support is. For Monday, the support is going to be 34.39 and the resistance is going to be 38.68. As I think CRISPR Therapeutics becomes very interesting for dollar cost averaging among all the genomic companies, mainly because they have a good balance sheet, they have got good cash runway, they have got great collaborations, and they have got a monetized product. So if you put all of those things together, it looks good. And if push comes to shove, they can suspend some of their pipeline items for the time being and conserve their cash and extend their cash runway because they've got a lot of candidates in the pipeline. So that's the way I'm looking at CRISPR Therapeutics. Next, I'm looking at IMTX out here, and it managed to stay on top of this bull channel. Green line, which is a support from a previous bear channel, and it still has the potential to form a head and shoulders pattern, which is very bearish. So one has to be very careful with IMTX. And then if you look at PACB has fallen below the last support that we had given at 1.21. So I'm going to mark that as a resistance. And post market, it's up 0.88%. And that's not much to write home about because the drop today was of 8.06%. That's a huge drop. I don't think there is much of sentiment left with Pacific Biosciences. Then we look at Bluebird. I think it's performing as expected. Editas was down 3.85 today, and it managed to stay below this diagonal line of resistance that we drew yesterday, where I was saying it's a minor line of resistance. That was sufficient to hold it back down. So for tomorrow, again, that is going to be the resistance that we need to break out of. And if we did, then the 9-day exponential, which is this red line, is going to be the resistance at 1.34 and then the 20-day at 1.44. On the bottom, I would say that we could have a support somewhere out here. This is a minor line of support that I would like to draw out here for the lack of any other indicators. So this is potentially a little bit of a support, and this happens to sit somewhere around 1.19. So that could be the ultimate support. If not, then it's going to be very terrible. And then we have Allogene, which is down 0.64% during the day's trading, and post-trading, post-market, there is no trading happening at this point of time. And this diagonal line of support, which has been coming with us all the way from somewhere around 6th of November 2024, has managed to provide us support. We have dented it 3 times. So the 4th time, maybe we might go down. So I don't know. MACD and momentum both are looking weak. Then we look at Vertex, which is on a diagonal line of support, and it's on a bull channel. Today it lost 1.96%. We can take that. And the support is going to be 480.91 on this diagonal line of support out here approximately. And I think that's what I would say with regard to Vertex. Next, let's look at Iowa. Iowa is still riding this diagonal line of support on this bear channel, and it's looking very weak indeed. The 9-day exponential, it's the next resistance, and the support for Monday is going to be at 3.39. Next, let's look at Prime. Prime has ended just right on top of this diagonal line of support. So it can go down further. It dropped 0.50 today. So for tomorrow, the first resistance is going to be the diagonal line of resistance out here, which happens to be at 1.96. And then for support, I think I would like to put a line out here and say that it's a minor support. And this is a minor support that we are going to get. And if we continue traveling along this support without breaking down or going up, then we are going to create this interesting wedge pattern. And in the wedge pattern, I think we're going to fall on the downside. That's the way I'm looking at it. So right now, I think I'll leave the charts out here and say that, yeah, the times are difficult. You guys have to be more resilient and be careful. As long as you have cash in hand, that is great. And with that, my friends, I'd like to bring this video to an end. Thanks and have a great day, and bye for now.